Hey, XRP folks, glad to see you back on the blog. I'm your host, and this show might be one of the most important ones we've ever done because a huge event is happening in the XRP community right now, and everyone is talking about the same name, Jake Claver. You may have seen the clips going around everywhere. People are wondering if Jake knows something about the schedule for XRP that he can't share. The way he smiles and waits before answering makes everyone in the community go crazy because what he doesn't say is more shocking than what he says. When someone asked him straight out if he knew something important about XRP's next move that he couldn't say, he didn't dodge or deny it. He just smiled and said, "Hope you're as excited as I am." That's it. And just that one line has caused a lot of talk in the community when a guy like Jake, who has been clear, constant, and rock solid for more than 18 months, acts that sure of himself. It makes you wonder what's really going on behind the scenes. That's what we're going to talk about today. Jake has been right before, so he's not just another voice online. He has been following changes in XRP's liquidity, moves by institutions, and the system's secret workings for almost 2 years now. Everyone else changes their minds every week, but Jake's message has never changed. Thought, not luck, is what makes someone so sure of what they believe. It wasn't just another tweet when Jake Claver said, "XRP reserves are disappearing quickly. Understand the mechanism behind the coming supply shock before the market wakes up." That meant something. When you keep an eye on exchange funds and see that supply slowly going away, it almost always means one thing: deposits are building up. But the real question is, who is doing it? Jake has been arguing about this domino theory for a long time, and now it all makes sense. Here's how the idea works. The world financial system goes through a series of big changes that happen one after the other. When one brick falls on top of another, the world's money supply has a new support. It's possible that XRP is that backbone. And this is where a lot of different things start to fit together. Jake keeps talking about how countries handle debt, and this is where XRP could be much more useful than anyone thought. He said it a lot. You can get out of debt by either increasing your possessions or decreasing your debts. But what if the US government already has a digital product that can be used to help balance the books when the time comes? If you think that sounds crazy at first, think again. The US government has already taken crypto assets, sold them, and kept them. It's been done with both Bitcoin and Ethereum. Then why not XRP? Imagine that XRP was sitting quietly on the government's balance sheet, ready to be used. As soon as these digital reserves are used all over the world and their value goes up due to demand and liquidity, they could quickly change the math on America's debt problem. It's not about making money, it's about getting more worth. That's exactly how the books are kept at big businesses. They let things that are going up in value rebalance the scales. The same reasoning works in a digital world too. It's just faster, clearer, and stronger. Jake is sure of himself because he has seen those puzzle pieces fit together perfectly. Does legislative clarity ripple? Check. Getting more involved in institutions? Check. Exchanges supply going down? Check. These are the signs that a system is quietly getting ready to be used. Now let's talk about what Jake really means by domino effect. Because when one hallway opens, it doesn't just bring money, it also speeds things up. That's what makes the next Imagine This happen. The value flow starts to grow as more companies, banks, fintechs, and central banks use XRP on a large scale. The real fireworks begin at that time. Because you can't print XRP like you can with fiat monies. The supply is set. This means that when demand and utility go up, price discovery goes very quickly. A while ago, Jake said something strong. The government doesn't need to change the value of XRP. The market can take care of it for them. He's totally right. Every day, governments and central banks make triggers. They set rules, make liquidity corridors available, and push for acceptance. The market then takes care of the rest. That's how the next era of money starts. In other words, not by decree, but by plan. Through a number of planned actions that look like separate events, but are really part of a single shift that is being coordinated. That brings us back to what Jake has said from the beginning. There isn't a random gathering planned for this. The change in strategy is already happening. Now, it's different because it can be seen. Take a look around, waves spreading across countries. The number of relationships they have with banks is growing faster than ever. And liquidity providers are moving away from standard rails and towards systems based on blockchain. In a quiet way, Jake has been pointing to this as the change, and when you think about it all, the signs start to fit together like a map. It's not an accident that the amount of XRP in circulation is going down. The change in how institutions act isn't a coincidence. Ripple swell ETF whispers, and regulation alignment are all parts of the same chain reaction that's about to happen. Jake's idea of dominoes might be the best way to explain it. Clear laws, liquidity routes, and onboarding of institutions are the first few dominoes that have already fallen. The next ones are widespread use and integration in the real world. Now, this is where Jake's tone really stands out. He doesn't sound like someone who wants to get out. He sounds like someone who is waiting for something to be sure. That's what makes his message important. Someone with that calm, steady confidence has already seen enough to know how this story ends. Remember that markets move quickly when things are in line. One day it seems calm, and the next day the whole system changes. People who have been paying attention and seeing the big picture early are ready to act when that happens. In that sense, this service is for you. Not just looking at data, but also knowing how things move. The kinds of changes that change the course of financial history. Next, we'll talk about something even more in-depth. That's why Jake Claver's hints aren't just about relationships or cash flow. It's about how digital assets could be used to reset the whole system of global debt. It's a big idea, but it has a clear link to everything we've talked about so far. So don't leave. That's because next we'll talk about how governments, institutions, and Ripple could be using XRP to quietly change the way money works right in front of everyone's eyes. This is where everything turns around. Since you can go back in time far enough, the world's financial system quietly changed direction toward the exact structure that XRP was designed for. At that time, Ripple wasn't in the news. It wasn't the start of the SEC case. It took place in the Bank for International Settlements years before most people even knew what Ripple was. In 2016, the BIS started to try out ways to settle digital assets across borders. There were many references to bridging currencies that could be used to instantly convert between different types of cash. That's exactly what Ripple said in its technical white paper in 2014. At the same time, the Federal Reserve's Faster Payments Task Force named RippleNet as one of its solution providers. Take that in. It was named by the Federal Reserve as a framework for the next generation of payment systems, years before any crypto influencers talked about XRP. But it's not that simple, because when the International Monetary Fund, IMF, started to push the idea of neutral payment assets in 2018, Ripple's leaders showed up on IMF panels behind closed doors with regulators and central bankers. It wasn't just crypto that Chris Larsen, David Schwartz, and Brad Garlinghouse talked about. They were talking about corridors for world liquidity. What does that matter? A lot of money moves every day through SWIFT, CHIPS, and Target 2, thanks to liquidity channels. And on-demand liquidity takes its place in Ripple's design. Take a look at this. To pay an American partner, a European bank doesn't have to put dollars into a U.S. account ahead of time. Instead, XRP works as a bridge between all countries. You can change euros into XRP and XRP into dollars in a matter of seconds. That's what world payments are all about. It was fixed by Ripple. From now on, this is where the story speeds up. Ripple quietly agreed with MoneyGram in 2019 to use XRP for real money transfers. But what most people didn't know is that Ripple opened offices in Washington, D.C. at the same time. It had nothing to do with business. It had to do with where the regulators stood. Since then, every move has been made to make regulations clear, make sure they are followed, and make sure they work directly with the systems of central banks. Finally, when the SEC went after Ripple in December 2020, the industry split into two groups: speculative crypto projects versus legal financial infrastructure. Ripple did more than just fight back. With the help of the case, it was able to prove that XRP is not a security in the United States. It was all about that label. The moment that choice was made public, global institutions were free to look into XRP as a settlement asset. Look at what happened next. After the decision, Ripple started working with companies in the Middle East, Asia, and Latin America just 60 days later. They were going after trade routes that move hundreds of billions of dollars every year. The DFSA set up guidelines in Dubai that were similar to Ripple's licensing language. The EMAS in Singapore gave its approval to XRP under the Payment Services Act. SBI Holdings increased its use of ODL by 2 times in Japan. They did all of that in months, not years. What's even more interesting is this. In about the same time frame, the Federal Reserve launched FedNow, a way to make fast payments. While everyone was focused on domestic payments, not many people knew that FedNow's technical paperwork talks about being able to work with future cross-border settlement networks. Since 2014, Ripple has been working on something. It is the only network in the world that can settle payments across borders in less than 3 seconds and provide cryptographic proof. It's not an accident. This is orientation. And if you take a step back, the way Ripple built its system, one that is interoperable, controlled, and instant, is exactly what central banks need to settle CBDCs between countries. The Digital Pound Foundation, the Digital Euro Association, and the Digital Dollar Project all work together with Ripple officials at events in 2023. These projects all have to do with digital monies used by different countries. 2 of them need a neutral asset to act as a bridge, and XRP is the perfect cryptocurrency for the technical needs. That's why the BIS Innovation Hub put out a study calling tokenized liquidity bridges the key to settling transactions around the world. That phrase isn't made up. In its on-demand liquidity model from years ago, Ripple actually came up with the phrase, when central banks say they'll look into token bridges, that's just a code word for trying what Ripple has already made work. Patents in liquidity routing, real-time FX conversion, and multi-ledger interoperability are paving the way for Ripple's next big step forward. These are the building blocks of the new financial system. ILP, or the Interledger Protocol, helps banks, CBDCs, and stablecoins work together. XRP is the best currency for this purpose. 11,000 institutions still use SWIFT payments, which are slow and expensive. Ripple's on-demand funding settles in seconds and costs very little. Even if only 5% of global flows switch to XRP settlement, it could double the amount of money that moves every year and make demand go through the roof. To see what's going on today, zoom in. Ripple's network is no longer just for banks. It includes company treasuries, fintech platforms, and payment providers around the world. Companies that move money between different currencies are using Ripple's APIs to connect straight to their systems. They aren't keeping XRP as a risky bet. They're using it for infrastructure. That's the difference. It's not about price changes. It's about how things work. Every XRP transaction speeds up transactions across borders, lowers system friction, and saves money for organizations. That's not possible with the old method, SWIFT, CHIPS, or even ACH. Now look at how the story around the world is changing. It's the first time that central banks have said in public that digital assets will be used in payment. According to the IMF's report from July 2024, a neutral cross-ledger asset might be needed for foreign CBDCs to work together. That is an exact copy of XRP's build specs. You can see where this is going without having to guess. All you have to do is follow the facts, the rules, and the partnerships. While the rest of the crypto market chases memes and stories, Ripple has been quietly closing off the paths, patents, and policy backing that will make up the next financial framework. It becomes more clear as you look more closely. Every big step forward, like the coordination of the International Monetary Fund, innovation pilots for the Bank for International Settlements, and testing of digital currencies' interoperability by central banks, goes in the same direction, toward a neutral bridge network that connects digital currencies around the world. That bridge is already there. It's XRP. No one will tweet about the end of the shift when it's done. It's going to happen. Because that's how money systems change over time. First slowly, then all of a sudden. When you hear terms like bridging infrastructure, tokenized liquidity, or interoperable settlement, keep this in mind. They are not talking about the future. That's what Ripple used to say almost 10 years ago. Right now, those early ideas are being turned into systems that can be used in real life. And the change won't happen slowly when that switch is turned on and banks and governments start settling straight through RippleNet. It will happen right away for the reason that the system is already made. All that's left is for it to fully launch. So this trip, this quiet, slow rise to XRP is more than just a crypto story. It tells the story of how money changes all the time. The trip keeps going. This is not advice about money. Most people still don't fully understand this turning point. Anytime XRP goes live, the system already knows about it and doesn't need to say anything about it. When the internet was first made, no one said, today is the start of the TCP IP revolution. It worked in the background until everyone started to use it. The history of XRP has followed the same trend. First, quiet infrastructure, and then public awareness. Take a look at the timeline of events since the case. Ripple isn't talking about guesses about prices. They're talking about hallways in institutions. In the last year, Ripple has teamed up with global money transfer companies, government-backed fintechs, and payment platforms that can reach tens of millions of end users. Ripple's purchase of Mataco, a Swiss company that stores digital assets, was one of the most important moves. That looks like a normal growth move at first glance, but it's really the missing piece, keeping track of tokenized goods. What does that matter? When real-world assets like RWAs, bonds, carbon credits, and tokenized currencies are added to the blockchain, security becomes the person who controls access. And Ripple now has power over ISO 2022 compliant custody infrastructure that is used by institutions. It's all in that sentence, ISO 2022. It's the new way to talk about money around the world. It is now used by all important central banks, SWIFT, and cross-border systems. RippleNet was made on top of it many years ago. XRP transfers already have ISO 2122 fields, which means they can work with central bank systems without any changes. That's not preparing for the future, that's now. Compliance with ISO 2022, real-time liquidity, and regulated custody make up the plan for digital settlement between banks. Yes, that's exactly what Ripple is building behind the scenes. With Judge Torres' decision, the law became clear first. Next was getting a license. Ripple now has licenses in more than one system in Dubai, Singapore, the UK, and the US. The third step, CBDC tests, is already underway. There are now at least 5 official CBDC projects that Ripple is working on. The Republic of Palau, Bhutan, Colombia, and several other central banks in Africa and the Middle East work together in this way. They all use Ripple's private system, which is based on the XRP system, XRPL Foundation. That's the important thing. Every private ledger can connect back to the public XRPL. This means that when those CBDCs go live, there will only need to be one neutral currency, XRP, to connect their liquidity. In other words, XRP is what makes transactions between a digital rupee and a digital dollar or a peso and a pound possible. This isn't about if anymore. The machinery is set up and ready to go. The Bank of England has made it clear that it is looking into cross-ledger payment models. Bridge options have been brought up more than once by the European Central Bank, and the Federal Reserve and the BIS Innovation Hub have been working together on tests of connectivity in the background. Each of these pilots checks out what Ripple has already made. Take a step back. Take a look at the bigger view. Once a new banking network comes out, like SWIFT in the 1970s, CHIPS in the 1980s, or FedWire's upgrades, the first step is to test it internally. The next step is to coordinate regulations. Then the new system becomes the norm suddenly. Now we're in the last stage with XRP. No longer is it just a guess. It's time for launch. Ripple has set itself up to be the backbone of cross-border digital banking that no one sees. The public won't understand what's going on until it's fully working. The reason being is that most people will think banks are now faster. They won't be able to see that XRP's liquidity engine is what makes it fast. Now, this is where things speed up even more. Ripple's next big thing isn't just money. Value that has been tokenized in every way. Things like real land, goods, intellectual property, and carbon credits. These all go into tokenized markets that are worth tens of trillions of dollars. But they'll need ways to move money between communities. That's where XRP really shines. XRP is not going up against Bitcoin or Ethereum. It is a totally different layer. The layer of settlement, it's not a smart contract or a place to store value. It's the end of all transactions. Then organizations will understand that the slowest part of digital finance isn't making tokens, but settling them. XRP turns into the world's most sensible bridge asset. Now, pay close attention to what Ripple has been saying in a sneaky way through agreements and patents. Their papers about liquidity routing and multi-hop payments basically talk about a settlement network that can improve itself. Think about a world where a single transaction finds the quickest, cheapest, and most liquid way for 2 coins to exchange hands. That's not just a guess. It is already built into RippleNet, the cash engine that is run by AI. As it grows, Ripple can get liquidity from exchanges, market makers, and lanes in real time. In other words, XRP does more than just bridge value. It changes based on the world liquidity situation. Of course, no other computer thing can do that. This is the upgrade to global banking that you can't see. A real-time, borderless city grid that can fix itself. Ripple has been getting all the legal, technical, and political pieces in place for that exact change. Next, think about what will happen. They will need to be able to talk to each other when the first ones go live in 2025 and 2026. Cross-ledger communication becomes the most important thing in the world at that point. And when the government asks who already has a tried and true legal bridge solution, Ripple will be the only business that can do everything. Safety, following the rules, speed, and a proven tool for settlement. It's all there. The system, which began as a company in 2012, is now built right into the plan for the next generation of money networks. The irony is this. While small trades look for volatility, the biggest banks in the world are quietly setting up their operations around the rails that Ripple built. They don't care about the fuss. They worry about how well the infrastructure works. It works with Ripple's method. This is why big banks like SBI Holdings, Santander, and Standard Chartered are such strong partners with Ripple. This is not an experiment. They are live connections. No longer is it just about crypto. They want to change the way money moves. ISO compliance, CBDC pilots, BIS coordination, Fed integration, and global corridor activation are all pieces of the puzzle that all point to the same result. XRP is the middle ground for the new digital economy. Here's the last thought that ties the whole trip together. The world doesn't notice when structures change until it's too late. 90% of banks were already using SWIFT when it became the standard around the world. The web had already spread around the world by the time TCP/IP became its main protocol. The network will be fully operational by the time XRP is recognized as the settlement core for digital money. It will be running the financial system in the background. That's the real way change works. Not suddenly or loudly, but all at once and without being seen. Because the statement doesn't have the real power. It has to do with adoption. And the process of adoption has already started. The road ahead has already been paved. The architecture is all set.